This is John Paulamy of the Actionable Intelligence Alert. Today is Saturday, June 30th, 2018. And in today's market update, I want to talk about the recent OPEC meeting and the disappointment that came out of it, and the fact that realization is now starting to seep into the market, oil markets that is, that supply is not going to be increased sufficient to meet demand. I also want to talk about the ongoing and continued positive news in the uranium market. So this week we had a OPEC meeting. Obviously there was some expectations that OPEC would raise production by 1 million barrels a day. Subsequent to the meeting, it was kind of a disappointment when it came out that there was only going to be around a 600,000 barrel per day increase. After that, the oil market really took off, and we've kind of broken out to some new highs. Now, this shouldn't be anything new to people that have been watching my videos. I mean, I have an expectation that because of the lack of cash flow reinvestment into new production, that we are going to see higher oil prices. Demand is relentless, depletion is relentless, and demand is increasing. Yet we have had year after year after year of insufficient investment in new production. And another thing I think that needs to be kept in mind is the reason that the OPEC cartel exists is to maximize the cash flow or the profit of the members of the cartel. Yes, it's a balancing act, and all the political machinations and different countries that are involved, but in the end, they're not in the business of lowering prices. They're in the business of maximizing the return on their depleting assets, which is oil. So the cartel understands that it has to maximize the return, but it also understands that it can't let prices get too high, or there's a fine line between maximizing cash flows and creating demand destruction. Now, my view is that oil prices are going to continue higher. I hope that it's a slow grind higher that will allow us to maximize our profits in some of these oil-related speculations and investments that we're in. However, it very easily could just make a run and get to a point where demand is destroyed via price. And that's what I think is eventually going to happen. There simply has not been sufficient investment to supply the world its oil that's required. So just a couple of news items or reasons why the oil price is heading higher. One of the things that really wasn't talked about is the fact that there was a big electrical outage at one of the Syncrude upgraders in Fort McMurray, and that's going to necessitate an outage that's going to result in 360,000 barrels per day being taken off the market, at least for the entire month of July. So that oil will come back online, but in a market that is insufficiently supplied, any type of outage, any type of supply constriction further exacerbates an already precarious supply-demand balance. Venezuela continues to be is brewing up a crap show. Every report I read out of the place, I mean, it's gotten to the point now where literally the infrastructure is collapsing. People are stealing the equipment. People have walked off the job. It's very conceivable that I think what's going to happen, as I've said before, is that production is going to continue to decrease in Venezuela to the point where there will no longer even be any exports out of Venezuela. At some point, I am thinking within the next 6, 12 to 18 months, the military is simply going to step up and remove Maduro from power, and then there's going to be a period of turmoil. Economic turmoil is going to get worse, but at some point, in order to straighten things out down there, they're going to have to change their view towards foreign investment and dealing with foreigners with the capital and the human resources that are necessary to fix the problem of the decline in Venezuelan production. I read an article by Robert Rapier in Forbes this week. He's a very good energy analyst. He's on various talk shows, podcasts, and writes articles. But basically, he said in an article this week, production is basically falling at a rate of 10% per quarter. So not good. Of course, Iran sanctions. I've seen more and more news articles about the Trump administration putting pressure on various countries to not import Iranian crude. We'll see how that goes. I really think it was stupid to, with the situation in the oil market, to put sanctions back on Iran at this point. The oil was needed in the market, and the president, whether he realizes or not, oil and energy prices, gasoline prices in the United States are very political, and he was able to take credit for some low oil prices earlier in his administration, but I think he's going to find that people do not like $4 gallon gasoline. So I think that's coming in the next 6 to 12 months. Another OPEC exporter, Libya, since the, Muammar Gaddafi was removed from power, it's been nonstop fighting, different factions fighting for control of the oil assets and infrastructure. So that's affecting exports from that country. We've seen reports this week again, Permian Basin supply is being throttled due to lack of pipeline takeaway capacity. That probably won't be rectified until sometime late next year. And demand continues to grow, especially in the emerging and frontier markets. There's an excellent article that I've pointed out before on the website of the Goring Rosenwag site, where they talk about the S-curves that countries go through for energy demand and how the emerging markets, various emerging markets and frontier markets are now entering those S-curves. So we're going to see demand increasing as obviously economic growth requires energy. Primary transportation fuel is oil. That's demand's going to go up. And of course, depletion is the dragon that never sleeps and is never discussed, 5 to 6% per year. If you have 100 million barrels of daily demand, you are decreasing that by 5 to 6% a year. That's 5 to 6 million barrels. That means you have to find and bring online the equivalent of a new Iraq or North Sea every year just to replace the depletion. It doesn't account for the investment that needs to happen for the demand growth that's in addition to the depletion. So that's really the thesis right there for why I'm bullish on oil. Depletion plus demand growth equals huge amounts of investment needed that didn't happen for several years and is now going to result in less supply and higher prices. So interesting article I saw this week from Rystad, which is a energy research firm. Quote from their recent article or report: new facilities worth more than $110 billion have been approved for development since the beginning of 2017 versus only $50 billion in 2016. So this is exactly what we were expecting. As cash flows increase due to higher oil prices, and the oil price is almost up over 100% in the last 12 to 16 months, we have an expectation that companies that produce oil, which is a depleting asset, would have to increase investment or they would go out of business. Another quote from the article: out of the 17 deepwater projects that have been approved over the past 18 months, as many as 16 had previously been in the development queue, but were then put on hold during the industry down cycle. So I saw some stupid article about the CEO of Royal Dutch Shell talking about, the end of the oil era and all this. I mean, the stupidity really of people that are supposed to be thought leaders or leaders in these corporations in the West is mind-boggling. Oil is not going anywhere. Oil demand growth is going to continue for decades. It's just that simple. And these idiots that are making these kind of stupid proclamations, I mean, this should be telling you this is what we really want to see while we're still in this nascent bull market in oil, because, you know, if everybody was bullish on oil, then it would be the time to get out. But we even have like the CEO of a major oil company talking about the end of the oil era and the investments they're going to make in renewables. I've been through these cycles before. BP went through one of these cycles during the last oil boom, and now I guess Royal Dutch Shell is going to repeat that mistake. But anyways, oil companies are in the business of producing oil. As their cash flows increase, they're going to reinvest that money in additional production. If they don't, they will eventually go out of business. And for many of these leaders or managements, their compensation is directly tied to increasing oil production. I mean, it was the same thing I used to say during the housing bubble, when people were saying, well, why are all these housing companies or companies that build houses building into these markets when there's increase in you know, there's not enough demand? Because if you're in the business of building houses, you build houses. If you're in the business of drilling for oil, you drill for oil. And once your cash flow or ability to access debt increases because the commodity price increases, you're going to go out and drill more oil. So that's going to filter down into oil services where we're invested. Speaking of that, here's Ensco, the offshore oil driller, my favorite oil services company. It's up about 50% since we recommended it. It still hasn't broken out, but I think that we're not too far away from seeing a breakout to the upside. Obviously, the stock has run in the last couple weeks because of the oil price increase. I think this is a weekly chart going back almost 2 years. You can see the double bottom in early 2018, and now we're looking to break above $7.5, $8.5, and that would indicate to us a break to the upside. I would be buying this company on weakness. So let's talk about uranium. I get a lot of comments, emails, Twitter messages, whatever, communications about the uranium market. And many people are, I had a correspondence with a guy this week, and he said, well, I really hope that you're right about this. So let's talk about this. I think this is, I've said this before, uranium is the best profit asymmetry setup that I have seen ever. I'm not the only one saying that. Michael Alkin has said that. Chris McIntosh has said that. A lot of people are saying this. If you go on Twitter, there's, you know, a good half dozen, 10 guys. They post every news item related to uranium. However, you should not listen to us. You have to have your own conviction. I have conviction about the uranium market. I am moving all in, as they say in poker. I used to like to use poker analogies. I am overweight uranium stocks, okay? And the reason why is because I have conviction that my thesis and my research is correct. Now, how do I get conviction? Because of my knowledge of the uranium market. How do I get my knowledge of the uranium market? Not just listening to other people on YouTube videos or reading newsletters or whatever. I go out and do the research myself, okay? And I understand the energy markets. I'm in the energy markets. I understand why nuclear is a base load preference for many countries. I understand the supply-demand dynamic, and I understand that it's a growth industry. I mean, I actually read an article on Seeking Alpha this week from a kid that's in college getting an MBA, okay, at a major university, who wrote the most ridiculous article negative on the uranium market. And he had simply no understanding. He was actually saying, well, because of the, you know, Trump administration is not going to be able to save the nuclear industry in the U.S. Guys, forget about the U.S. Forget about Western Europe. They have a free website that the Nuclear Association supports called WNA, World Nuclear Association. They have, you can spend a whole weekend going through the facts, country by country, reactor by reactor, about what reactors are being built, what reactors are being planned, what reactors are coming online, the most efficient reactors, the ones that have produced the most kilowatts, whatever you want to know, they tell you. And the fact is that demand for uranium is growing. 57 reactors are currently under construction. 153 reactors are in the planning stage. And most of this growth is coming from China. Okay? There's 1.2 billion people there. The people are literally choking on coal particulate matter. Literally. I've shown the pictures of the smog. Go online and look up Chinese pollution smog in images on Google. You'll see horrific pictures from some dystopian Mad Max movie, or, you know, Escape from LA or something, with this huge banks of pollution. So that's why they're on this huge nuclear building spree. Okay? They're not the only country. India, Russia, South Korea. So, as I've said, pollution, particularly particulate matter from coal burning, is a big problem in developing countries. I mean, when I was in Ulaanbaatar, Mongolia, in the fall, I wasn't even there in the winter, but in the fall as it began to get cold, I mean, these people in these GARE districts just burn coal in their GAREs or tires or whatever, and you literally, I mean, my lungs were burning walking down the street. I could not wait to get inside of a building because breathing was hard, and it was just leaving like this acidic back of your throat. I mean, I can't even imagine living in that day after day, year after year. It has to change. It's going to change. I mean, these governments' legitimacy depends on it. I've said this before. So when I see these ridiculous articles or these editorials about the nuclear, forget about the West. The West is in freaking decline. Most of the people and most of the growth is in Asia. Focus on what's happening in emerging and frontier markets. Okay? That's where the action is, at least as it pertains to uranium. Okay, Japan they've restarted 9 reactors. 17 more plants have applied for restart. I actually saw a news article this week where one of the utilities was saying that they're ready to start a new build campaign for nuclear power. This is, you know, 8 or 9 years after Fukushima. And the reason why is you cannot run an industrial economy on wind and solar and Al Gore's pizza farts. It ain't going to work. You're talking about, people don't understand how big the demand is, or what the supply is required for an industrial society, in the trillions and trillions of watts and BTUs that are required. When you go to that light switch, you expect that when you flip it on, it comes on, that your refrigerator stays running, that the AC works, that your furnace heater motor works. Okay? If a cloud goes over or the wind isn't blowing, you don't want to sit there for 3 or 4 hours and hope it starts blowing again. You have an expectation that you are living a modern life, and that when you flip that light switch, the lights come on. That only comes from baseload power, guys. And your choices are coal, gas, or nuclear. That's it. I hate to break it to people, but it's simple math and thermodynamics problem. You're not going to run a modern industrial society on renewables. It is not going to happen. It's impossible. The world transitioned from less dense energy to more dense energy as it got more and more complicated and more industrialized. Started out burning animal dung, then wood, then coal, then oil and petroleum, then nuclear. And you will notice, if you look, that each transition went from a less dense fuel in BTUs to a more dense fuel in BTUs. You know, there's a reason why you can go to the Netherlands and see the windmills that are decommissioned that are now tourist attractions from the 13, 14, and 1500s that they used for grinding grain or pumping down low-lying areas. As soon as the steam engine came along, they mothballed those because they were less efficient than the steam engine. Okay, so I get the pollution thing about the coal burning. I get that. What I don't get is people not understanding the math involved. This is a math problem. It's not because I'm a shill for the oil and gas industry or the nuclear industry. It's a simple math problem. You'd have to build millions and millions and millions of wind turbines to try to make this work. It simply isn't going to happen that way, guys. So that's why these countries that actually are living in reality and have real problems are turning to nuclear. It's the safest, cheapest, best source of energy. So, to continue on the bullish thesis, supply cuts from Kazatomprom, Cameco, Paladin, and Orano. More to come if the prices not begin to go up. Right now, as I said it before, and I'll say it again, the uranium mining industry is in liquidation. You cannot mine something for $60, $50, $60, $70 a pound and sell it for $22 a pound. It doesn't work. No one's going to put additional money into developing a new mine or bring on new infrastructure if they can't cover their current costs, not to mention costs plus some profit margin. So we're going to have to see the uranium price go up significantly just to entice more capital to come into the market and develop these uranium markets. And I've just said before earlier in this slide that demand is increasing. So you see that the demand and supply are going to collide at some point. And I have a chart that shows that coming up. Now this next bullet point is something I think is one of the most important for this whole uranium bull thesis that I think is going to be a big catalyst. We are now seeing private equity money or investment capital coming in to purchase physical uranium. This is the Yellow Cake IPO next week. They're going to raise $170 million to buy 8 million pounds of uranium from Kazatomprom. They've also said that depending on market conditions, they are willing to spend $100 million a year for the next 9 years on additional uranium purchases. Okay? This is not the only entity that's doing this. We've seen other reports that more investment and speculative money is moving into physical uranium purchases. So that spot market is getting ready to dry up real quick. Cameco themselves, because when they shuttered or stopped production at McArthur River, said that they're going to go into they're going to fulfill their contracts from their own inventory and going into the spot market. So everybody can't go to the spot market. It just simply can't support all this demand. So I think this is going to be a huge catalyst for the rest of the year, and I look forward to seeing the uranium price start moving. Now another bullet point that I think has kind of kept the uranium price from really moving yet is the fact that the Section 232 petition basically has U.S. utilities on hold from buying uranium. You need to go into the market in about 2 years before you actually need to do a refueling on your reactor. It takes that long from the mine to go through the various processing steps and fabrication steps to go from uranium in a mine to the fuel rods that are inserted into the actual reactor. But as I've said, I think U.S. utilities are holding off because this 232 petition would limit imports to 75% of demand. Well, that's interesting because right now the United States imports 98% of the uranium that they use in their reactors. So I think U.S. utilities are hesitant to go out and buy uranium from foreign sources and then get caught up in a 232 petition and not be able to get their uranium from foreign sources. The problem with this whole thing is that the U.S. uranium industry simply cannot supply 25% of U.S. demand. It would take years for them to ramp up. So I don't think I know how that's going to play out yet. I do think that if the Trump administration and the U.S. government, in fact, goes through and declares that uranium's a strategic metal and all that, and forces and puts this through where it's required that 25% of the uranium used in the U.S. is bought from inside the U.S., you're going to have a huge run on uranium, at least U.S. supplied uranium, because there simply isn't enough ready to go to supply that need. So here's a chart that shows basically existing production, the new production coming online, secondary supply from inventories and other sources, and then demand. And you can see that supply is dropping off over time and demand is going up. And there's going to be a shortfall. And the problem is what a lot of people don't understand, even guys that are investing in uranium, is I've had people get worried about this. Well, if the price goes up, all this supply is going to come on market. Guys, There's been no investment in 7 or 8 years in new uranium mines. Demand increases. It takes 7 to 10 years, or even longer in some jurisdictions, to bring a mine online. And then you want to talk about a uranium mine with the radioactivity scare and the media involved and non-governmental organizations and George Soros and the rest of the tree-hugging, granola-eating nut jobs that want to stop all progress. Guys, the price of uranium is going to go up very, very high for a very long time, barring another Fukushima or Chernobyl. The demand is there. The supply isn't. It's going to take years to fix this once it gets going. It will get fixed. There will be sufficient money coming into it, but it's going to take a long time to fix this problem. So it's summertime. You should have your positions on. Inside the Actionable Intelligence Alert, this month's issue, I'm going to have 2 more uranium picks. One is a unique way to leverage, fairly risk-averse way to leverage one of the big uranium producers. And I'll also be including another smaller company, which I think has excellent prospects. So I encourage you to take a look at the Actionable Intelligence Alert, $79 per year. You can subscribe. I'll put a link to it in the comments. But I think people should just do their research and understand. Then they're going to have to just wait and take it easy. Go to a ball game. Go have a barbecue. Go fishing up at the lake. This is going to happen. This is the hardest part of this whole thing, is having the conviction, understanding that your research is correct, understanding that your knowledge, that your research and your knowledge of this industry is good, that your thesis is good, and then having the conviction to sit there and wait. It's hard to do, guys. I get it. I don't like it any more than anybody else. But you see week after week, momentum, the story is building, and once the contracting by these utilities starts, we're going to get a news. Here's what's going to happen. We're going to get a news item one day. It's going to say so-and-so utility just made a deal with Cameco or somebody for so much uranium at $55 a pound. No one is going to sell these utilities uranium at 22 or 25 or 30 or even probably $40 a pound. Or if they do, they will have some escalation clause in it to take advantage of the price as it increases over time. We're not going to see any term contracts signed at $20 a pound. It's simply not going to happen. People are not going to mine uranium at a loss and stay in business. It's just not going to happen. So I think the news is all positive. I can't find anything negative. The only thing that I'm concerned about is timing and the possibility of another reactor accident. Other than that, you should be accumulating these shares on the cheap and just sitting and waiting. I think what's going to end up happening is a lot of people are just going to have regret that they didn't buy enough of these shares. And like I said earlier in this discussion, I am all in. I've went way above my normal allotment that I would do, because I just see that this being the huge opportunity that it is, that I think it can create life-changing wealth. So that's it for this week, guys. Thanks for watching the videos. I know you guys like to hear about uranium, but the story remains the same. Just sit tight, be right, and sit tight. We'll talk to you next week. Thanks.